We've just published our 2024 Stewardship Plan and Global Voting Guidelines. Our Stewardship Plan sets out why stewardship is important, how we engage and vote for companies we invest in, and what sustainability risks and issues we're talking to companies about this year.
For us at HSBC Asset Management, stewardship is about acting in the best interest of our clients. It is a powerful tool which seeks to drive positive change, mitigate risk, and enhance the long-term value of companies we invest in.
It's also through stewardship that we can encourage companies to mitigate negative externalities and seek positive outcomes in consideration of their impact on the environment, society, and stakeholders.
Our approach to stewardship can be broadly categorised into 3 types of activity. First of all is simply speaking to companies. This usually takes place in a call or meeting with company management or specialists, and it helps us gather insights to inform investment decisions or to understand the company's perspective on a particular topic or issue.
Next is influencing companies. Through our research, we'll identify issues that can lead to significant risks to the company, and if we don't think that the company is doing enough to address these issues, we'll try to encourage the company to take action where relevant and beneficial to its risk profile.
In our stewardship plan, we've set out 7 core engagement themes and a set of high-level expectations that we encourage companies to work towards. We can also influence companies through the way we vote at shareholder meetings.
The final type of activity is holding boards and management to account for the way they run their companies. We do this by supporting or voting against board directors at shareholder meetings or by escalating our concerns where relevant.
We invest in almost 7,000 companies or issuers, so it is important that we focus our engagement efforts on companies where we think we can have the greatest positive impact.
In practice, that means prioritizing companies where we invest the most money or that are significant holdings for our investment funds.
It also means considering companies that play an outsized role in the transition towards a more sustainable world, whether that's because of their size, impact, or influence within the sector.
As a global economic engine, Asia presents significant opportunities and challenges from a sustainability perspective. Companies that have operations or supply chains in this region have a key role to play. As investors, it's important to be agile in our stewardship approach when we engage on emerging topics such as responsible artificial intelligence or responding to controversies because of how diverse the Asian market is, especially in terms of sustainability disclosures or ESG regulations. Whilst we're guided by global standards or norms, we're also sensitive to local nuances, regulations, and culture. To facilitate this, we have a strong on-the-ground presence in Asia, leveraging local insights, experience, and networks. At HSBC Asset Management, our active investment teams play an integral role in stewardship, working closely with the stewardship team to implement the stewardship plan. Ho, our head of credit research in Asia, will now go into more details on how engagements is embedded in the fixed income investment process.
In Asia fixed income, the active ESG and sustainable engagements are centered on companies with a UN Global Compact breach and climate change. In identifying opportunities for our sustainable SFDR Article 9 funds, this may also require engagement to verify the investment proposition. The challenge is that in most cases in Asia, the controversies relate to weak disclosures and human rights. Most cases are distinct and can be complex. From our perspective in credit research, what is important is that collaboration to combine stewardship teams' expertise with credit analysts' fundamental knowledge on the company and industry. Be it a UNGC breach, transition risk due to our coal policy, or other enhanced due diligence, the overall approach is coherent. First, we do our groundwork, both stewardship and credit analysts, for example, to assess the controversy or lack of disclosure, or to understand in detail the methodology of third-party providers. We then approach management to understand their perspective on the controversy and plans to address this. This is a two-way process. That is, we find most Asian companies are keen to hear our assessment, to seek expertise on how they can improve the quality of their disclosures, and also to understand market implications to their public debt. This is how we can work with issuers, and influence companies. We aim to set specific objectives that are aligned to our thermal coal and energy policies and monitor these over time. Finally, we come to a collective and informed recommendation on the investment implications. The outcome could have direct portfolio implication, for example, do not add to exposures, or restrictions to participate in new issues.
To find out more about the way we engage in votes, check out the Stewardship Plan and Global Voting Guidelines.